Welcome back to the Bitcoin Layer. I'm Nick Bhatia, once again joined by Demian Schatt. Today, we're going to get into Bitcoin's price action. Bitcoin trading very impressively in 2025, getting to 100,000 and then battling around 100,000 for several months. Yet Bitcoin does not seem to be detracted by any geopolitical factor right now. It's fascinating. Let's start with Bitcoin, Damian. What are you seeing out there, and what are you curious about with regard to the Bitcoin price?
Yeah, so as Bitcoin's trading around all-time highs right now, I'm seeing a lot of the community talk about M2. And I notice everyone's talking about this relationship that Bitcoin seems to have with M2 that often lags behind it. And M2 hit a record high yesterday, but I know we've had Michael Howell on and he's explained why he believes M2 is archaic. And I know here at the Bitcoin layer, we track asset-based liquidity instead. So I wanted to get into that a little bit today. I wanted to ask you about what exactly M2 is and how it relates to Bitcoin, and if that has anything to do with why Bitcoin is trading around all time highs right now.
Yeah, it's a great question, and I think it's important to start at the beginning for people concerning M2 and asset-based liquidity, the way that we measure it at the Bitcoin layer. The first thing that I want to say about this is that M2 is a measure of money supply. That is not up for debate. What is up for debate is whether M2 is the best way to measure money or if M2 going up directly contributes to Bitcoin going up. And I think those are up for debate mildly, but in the end, it is a lot of semantics because what we think about Bitcoin having a scarce supply, Bitcoin is going to go up if demand outstrips the current available supply. That's just economics 101. Well, if Bitcoin supply is fixed and it's not allowed to increase, every time you get an increase in money across the world, you have the potential for some of that money to end up in Bitcoin. So, from that perspective alone, M2 as a measure of global bank deposits broadly is two things at the same time. Number one, it can be not the best measure for measuring overall money while still having a strong effect on the inflows, total net inflows into Bitcoin. Both can be true, and I believe both are true. And that's really what I want you to know about. Let's say we have Michael Howell on, and he's going to critique M2 as an incomplete measure of money. He can be completely right. But at the same time, we can see Bitcoin trading really well alongside M2 going up. So it is not only is it possible for both things to be true at the same time, but I actually believe that both things are true at the same time. Let's go back to March of 2020, April of 2020, when the pandemic hit. Bitcoin went down by 50% in one day from around 6,000 to around 3,000, and then started bouncing hard over the coming months. What you saw was the US government enacting fiscal stimulus, and the raw deposit count for Americans started to go up. And that is because the government borrowed and spent that money, sent it to people, direct deposit or via check, and their deposit balances go up. And on the aggregate, deposit balances rose around the country. We also saw Bitcoin starting to rise. And even at the time, you had the meme of put your stimmy check into Bitcoin and watch it grow. We had a guest at USC that just had this graphic on screen, and I believe the $1,200 would have been worth around $17,000 today if I'm remembering correctly. I could be off there. So, is it logical? Does it follow logic that the fiscal stimmies in 2020 led to a higher M2, which led to a higher Bitcoin price? I would argue yes. And I would argue it wholeheartedly. Yes. Now, take a pause from M2 and go back to, not go back, but let's now travel over to the asset side of the balance sheet. And I know you wanted to know about the banking asset component of TBL liquidity. Because yes, we measure treasuries, we measure the dollar, but we also measure the size of the banking system on the asset side. And because a central bank and a commercial bank cannot own the same treasury, summing the assets of banks and central banks is a legitimate approach to measuring assets across the banking system. It is a sum. If the Fed owns 6 trillion of treasuries, and that's overstated now, I don't have the exact number. Let's say the Fed owns 5 trillion of treasuries. That means that out of the 37 trillion in overall treasury supply, only 32 are available for the rest of the market. So if we sum the assets of the Fed and the assets of US commercial banks, we can legitimately measure the size of the banking system in the US. And we do it across the world, but we just focus on the US. So now, go back to the stimmy in 2020. What does the government have to do to get bank deposits up for the citizenry? Because we talked about Bitcoin went up because people got deposits and used some of it to buy Bitcoin. That is correct, and we already said we wholeheartedly agree with that. Well, the government, to spend that money, has to do what? And what did they do during those first few months of 2020? Not the Fed, the US Treasury Department, the US government. What did it do when it passed these fiscal stimulus bills and, the rescue packages?
They would
It
have to buy back treasuries.
They have to borrow money via the treasury market, meaning they have to issue treasuries. They have to create treasuries. They have to borrow money and then spend it. So what the US government is growing its debt. So the liabilities of the US Treasury increase. Then the purchaser of those treasuries therefore has the asset side of the balance sheet increase. So who purchased the treasuries that led to increased M2 and fiscal spending? Who bought those treasuries?
The banks did.
The banks and the central bank via QE. So the banks and the central banks, right? So if we look at the asset side of US banks, they were increasing as they started to buy some of those treasuries. And that offsets the increase in deposit liabilities, which is M2. The Fed also increased their asset side and credited reserves to those banks on the other side, that they were taking some of those treasuries away. So it's a treasury recycling process where the government issues treasuries, the banks buy the treasuries, the Fed comes in and relieves the banks for some of those treasuries and takes them onto the balance sheet. But what do you get in the aggregate? You get so what do you get? Let's break it down. You have the commercial banks, asset side goes up, more treasuries. Liability side goes up, more deposits. The Fed, asset side goes up, more treasuries, and liability side goes up, more reserves. So in that way, you get an increase in M2 from the deposit liabilities increasing, but you get an even larger increase in our asset side liquidity, because not only do you get the commercial bank increase, you also get the Fed increase. So the Fed's increase in balance sheet isn't going to be reflected in M2. The commercial banks will be reflected in M2. The reason I'm explaining to you like this, Demian, is so that you can see that M2 and asset-based measures of the banking system, they go hand in hand. But for people, let's just say for the casual investor, the retail investor, the Bitcoin enthusiast, he or she thinks about M2 as more deposits in the system being firepower or fuel for the Bitcoin price, or more technically, for Bitcoin demand. That is a common sense approach that I agree with. And that is, I think, the nuance of what we are doing here. We can sit here and critique M2 all we want. We can hold up Michael Howell and his liquidity approach, and we can be like, listen, M2 is only part of the system. It's a lagging metric. It's not the best way. We can nitpick it all we want, and we can because we're technical about these things. And as you know, we have a balance sheet approach. So everything we do is layered money, monetary hierarchy, double entry accounting. Where do the treasuries end up? And what is the offset of those increases in treasuries? So we have a very thorough balance sheet approach. But because we have a thorough balance sheet approach, we can show you that, yes, M2 is on the right side and the treasuries are on the left side. So they are referring to the same thing. And my point here is about the casual investor. For the casual investor to say, hey, M2 is going up, that's more fuel for the Bitcoin price in the future. Who are we to critique that? Because we have a more technical understanding of double entry accounting? No. I think that that's unfair. So for a fixed income student, which a lot of our viewers are our fixed income students, they like our channel because they can learn about the banking system and they can learn about how these things really work under the hood. We can do T-charts all day. And we will continue to. We have some great sponsors at the Bitcoin layer, sponsors that are helping us deliver the highest quality research to you. But not just any sponsors. We want to bring on partners that are adding value to your Bitcoin process and journey. If you're serious about your Bitcoin, you need to start acting like it. Unchained just launched the Financial Freedom Bundle, a curated pack that includes a premium Bitcoin book, a new hardware wallet guide, and access to a private event with Tour de Meester. It's time to take control of your generational wealth. Make sure you go to unchained.com/TBL to request your financial freedom bundle. That's unchained.com/TBL. Blockstream, where the future of finance runs on Bitcoin. Go to store.blockstream.com and use code TBL for 10% off. Pick up a Jade Plus hardware wallet. It integrates seamlessly with your Blockstream app, and it's the perfect way for both pros and beginners of Bitcoin to get started with your cold storage. Store.blockstream.com. Use code TBL for 10% off. Human Rights Foundation presents the Financial Freedom Report. Go to financialfreedomreport.org, sign up for the free newsletter today, and get involved in the freedom aspect of Bitcoin. Bitcoin is a human right, and it is evolving as such. Make sure to go to financialfreedomreport.org, sign up for their free newsletter, and learn all about how Bitcoin is at the cutting edge of providing people with human rights. Smart macro analysts don't just watch the Fed, they watch the world. Don't let the critiques of M2 that even we are levying, don't let that stop your own common sense from thinking higher deposits, more fuel for the Bitcoin demand on aggregate. It is okay to make that leap. And as you know, price is truth, Demian. So if the price is going up as M2 is going up and they are correlated over a long time horizon, whether the correlation is causation or the causation is correlation, what price is truth means it doesn't actually matter. You know, you can argue all you want about what caused it. But if the common sense approach tells you that if money supply is going up and Bitcoin price is going up, and I want to relate these two things because it looks to be related, I endorse it. It also means, Demian, that we have an edge if we understand that the issuance of treasuries and how they filter in through deposit liabilities. If we understand that, then we actually have a lead on M2. And that is why we take our approach. We believe we have a little bit of a lead on M2. Not that we are better, but if we can lead it a little bit, maybe we can offer some additional signal. It also means that trying to predict where money supply goes by itself, I think, is maybe not a rat race. Rat race would be the wrong word to describe it, but maybe it's a fool's errand to try to predict money supply by itself. Instead, we look to the asset side of banks' balance sheets. We look at financial conditions such as bond volatility to give us a sense, hey, next week and the week after, where might M2 be going, up or down? And what will that do to Bitcoin? So I'll pause there to see if you have any follow-up questions or if that explanation gave you some additional tools to work with.
Yeah, that makes sense. Yeah, I have additional clarification question, technical on the banking side. Um, so when a when a bank gets a deposit, they go and they buy treasuries to keep as reserve, but they also load out that deposit. So there's not like a one-to-one where the deposit is correlated with an increasing amount of treasuries. So aren't there less treasuries to measure?
Okay,
If that
so
makes sense.
yeah, so here's what we have to think about. Throw out right now the idea that person A comes to the bank with $100 bill, puts it in, and now has a deposit liability instead of cash. And then the bank has to take that $100 and put it in reserves or then lend it back out again. Throw that out. That's that's how banking works for sure. We've talked about that, but throw that out for a second. Let's go to 2020 again, stimmy season. This is an important thing to understand how the bank, let's just call it Citibank now, how Citibank increases in size. Let's say that you are a Citibank customer and you get a $1,200 stimulus check from the US Treasury. They send it direct deposit to you, and in your bank account, which has $10,000 in it yesterday, it now has $11,200. Now, Citibank's balance sheet is now unbalanced, technically, because they just received a wire from the Treasury Department. They have to credit you $1,200 additional dollars, but then they have to figure out how to offset the increase in liabilities with an increase in assets. So, one of the ways that they can do this is to buy $1,200 worth of treasuries. And because the government borrowed and spent that money to their own customer, they don't even have to wire the money to the government for the bill. It just offsets. And this might be something that I lose you and the other viewer because we don't have the T-charts. I have done a video, Demian, on this exact balance sheet operation where the government sends a stimulus check to a citizen who banks at a bank that buys the Treasury to offset it. So the Treasury Department is the one that is borrowing and spending. Citi buys the bond, and you receive the spending. You and Citi are pairing off each other on the Citibank's balance sheet. Citi's balance sheet grows. The U.S. Treasury Department liability side grows. And in that way, the entire banking system grows. So it's not about, in the stimulus environment, actually the banks are simply the agent to facilitate the borrow and spend. And the only way that the bank is allowed to completely facilitate that is if its customers are the recipients of the new money, the stimulus money. So it's a little bit complicated, and we probably need, this is just a message to all our viewers, especially the ones who comment and think of this as a fixed income school and trade school. We are working on a whiteboard solution for you guys. I think it's important. The more time we spend in the classroom, the more time Demian is like, we got to get a whiteboard. And we know, okay, we want to take the channel to the next level. We want to help you guys out. So, but we will put a link, please, to that show that we go through the balance sheet operations so that people can understand how the banking system just basically magically grows when the government borrows and spends. Now, what I want to do, Demian, real quickly, is I want to put a chart up on the screen for people with today's Bitcoin price. Okay? Now, what we see here in this chart are weekly candles. And I have this little orange descending trend line here at the upper right corner of the screen here. And I took this little trend line on daily candles. And you know what? Just to be thorough, let's show people the daily candles themselves so that you can see that this orange line here, it comes from connecting 2 to 3 lower highs here on Bitcoin. And the price action started May 23rd, it appears. Lower high on June 10th, and then another lower high on June 30th, June 29th here, June 30th. Now, these lower highs are something we flagged. We also flagged the candles around that 112,000 as looking like, okay, there's some wicks over there that should serve as some short-term resistance. But Bitcoin has popped above that this morning off of the back of strong employment numbers. Nothing stops this train. The Senate passing the bill, the big, beautiful bill. The House may be close to getting this bill through. And what more fiscal spending is going to mean is larger Treasury debt, which increases the size of the banking system. And then as they spend it, some of that money ending up in deposit liabilities, otherwise known as M2. And Bitcoin prices in movements in money supply better than any other asset that we've ever seen. And so to see Bitcoin trade like this and break out above this baby, I'll call it a baby resistance. This isn't some massive resistance like when we saw Bitcoin break out during the week of the election and went straight from 70 to 100,000 in a couple weeks off of a major multi-month breakout. This is just a baby 1 month resistance breakout. But even each additional breakout, each additional cut through resistance, it is really impressive from the Bitcoin resilient side. I think that what we're seeing this year, the broad aggregate demand, the consistency of corporations out buying the ETF holders in terms of their Bitcoin accumulation. The Bitcoin accumulation this year is really, really impressive. And we we might see Bitcoin get into another bull season here or extend its bull season in a way that might catch some people off guard. Because even we were saying, oh, another 6 month consolidation would be great. Let's get Bitcoin to October, and then we're into October, and everything is going to be good in the fall. But if Bitcoin starts going up in the summer off of the back of expected Treasury issuance and M2 liabilities going up, it shouldn't surprise us. So we'll leave it there. We wish people a very, very happy 4th of July. Happy Independence Day. Please be safe with those fireworks out there. God bless the United States of America and this great republic, having nothing to do with politics, but hopefully having to do with the fabric of the nation, which ties back to our founding documents, including July 4th, 1776, the Declaration of Independence. Demian Schatt, I'm Nick Bhatia. We'll catch you guys next time.